All right, we are going to get started. Calling the commission, maybe not, the Committee on Audit to order. Madam Clerk, please call the roll.
Commissioner Wilson, Commissioner Killeen, Commissioner Garza.
Here.
Commissioner Knizik, Chair Dobb.
Here.
You have a quorum present.
Thank you. Next item.
B, Chairwoman's remarks.
I have none. Next item.
C, approval of the February 11, 2026 meeting minutes.
It has been moved by Commissioner Garza, supported by Commissioner Killeen. Any discussion on the meeting minutes? Hearing none, please vote on your tablet, and I vote yes.
Motion carried.
Thank you. Next item.
Commissioner Peterson Mayberry has not entered the meeting. Moving to D, unfinished business. There is none listed.
Okay, next item.
Item 1 under new business, forwarding a final copy of the corrective action plan and Auditor General's assessment for the Wayne County Department of Health, Human and Veteran Services Federally Qualified Health Centers Performance Audit Report.
All right, I will now turn this over to our Auditor General, Marcy Cora, our team.
Marcy Cora, Auditor General, and I'll have staff introduce themselves. And we also have guests if they could join us at the table, then introduce themselves. And I believe there may be guests online too, if they could introduce themselves after.
Vandy Otis, Deputy Auditor General.
Erica Jones, Principal Senior Auditor.
Good morning, Jabbar Jackson, Federal Qualified Health Center CEO.
Kamal Keparu, Finance Director for Management and Budget, Health, Human and Veteran Services.
Okay, great.
I'm going to turn it over to Vandy and the audit team, and they'll do the presentation.
Good morning. We assessed 13 of our recommendations during the review of HHTBS Management's Corrective Action Plan. And we determined that they took sufficient action to address 6 of the recommendations. 6 of the remaining recommendations are still in process and 1 is no longer applicable. And I'll turn it over to Erica and Max to proceed with the remaining presentation.
Thank you.
Good morning, everyone. Okay, the first recommendation, 2023-02A. To ensure that budgets are prepared based on the actual grant awards, we recommend HHVS Finance ensure that the FQHC program budget is reviewed and grant revenues and expenditures are based on the actual grant award. We reviewed the county's general ledger in the J.D. Edwards system and determined that for fiscal year 2025, the budget was not based on the actual grant award. We found that the grant award for fiscal year 2025 was approximately $2.2 million. However, the grant was budgeted at $6.1 million and expenditures were at $7.8 million. For fiscal year 2025, HAVS management planned to submit a budget adjustment to ensure that the budget revenues and expenditures align with the actual grant award. However, due to timing, management plans to ensure that the budget revenues and expenditures for fiscal year are aligned with the grant awards on a go-forward basis. We also noted that the J.D. Edwards system currently shows that the fiscal year 2026 budget revenue and expenditures amounts are based on the grant award. Based on limited assessment, if the plan action is implemented as described, the action appears sufficient to address the recommendation. However, a follow-up review may be necessary to verify that the described action has occurred. I'll now turn it over to Erica to do her part.
Okay. Oh, sorry, Marcy.
Just to add for this recommendation, each grant year, the grant runs, I believe it's through May 31st, and the new grant year starts June 1st. So I think that may be part of the problem. Kamal can add to that. But it's usually around $2.2 million. And it's important that we're only budgeting what the actual grant revenue is, because when we budget $6.1 million for grant and then $7.8 million for expenditures, it does allow you to expend more than the grant revenue is going to be, because there would be nothing in the system to prevent you from going over the grant revenue. So that's why it's important that for the fiscal year 2026. Right now, it's budgeted correctly. We just have to make sure that there's no budget adjustments in the current fiscal year that's going to add additional revenue and expenditures to that budget. And Kamal may want to add to that.
Come on, Capital Finance Director. No, you summed it up. We're closely monitoring it now. So it's just a matter of keeping our eye on it. But nothing to add. You laid it out.
Okay. Any questions or discussion from commissioners? Okay, great. Thank you.
Yep, next, for recommendation 2023-3A, we also noted this as in process. The recommendation was to lessen the burden on the general fund. We recommend HHVS finance budget expenditures, including chargebacks that are reasonable, accurate, and supported. HHVS Finance Management stated that they plan to budget not more than $500,000 in expenditures for the FQHC program on a go-forward basis. This allocation will cover the FQHC program expenditures that are not covered by the grant, such as salaries, fringes, and chargebacks. For fiscal year 25, we determined that HHVS Finance Management had budgeted roughly $1.4 million in chargebacks, rent, utilities, salaries, and fringes for the FQHC director, and that only $600,000 of this amount had been spent. For fiscal year 26, we determined that the budgeted program expenditure amounts exceeded the $500,000 threshold, but were reasonable. Based on our limited assessment, if the planned action is implemented as described, the action appears to sufficiently address the recommendation. However, a follow-up review may be necessary to verify that the described action has occurred.
Okay, Marcy? Oh, Marcy and then Commissioner.
I can just, for this one, as the expenditures were for fiscal year 25 were budgeted at $1.4 million. This contributed to $1.4 million in general fund contributions being allocated to the business unit on a 1/12 each month. Part of it was sent. So and you'll see in another, actually you're not gonna see because it was implemented. What they had to do is they had to do an adjustment to pull the excess general fund money that was sent to this business unit back into the general fund because it wasn't needed because of the way it was budgeted.
Okay. Commissioner Clean.
Thank you, Madam Chair. Why is 500,000 the magic number?
Come on,
That would-
Capital.
Yeah.
Go ahead.
No, yes, you.
Oh. Come on, Capital, 500,000. That was just our initial estimate. When you look at the chargebacks plus what some of the salaries. So that was just a rough estimate.
So this is for general fund money?
Correct. Because the federal
So-
grant do not cover some of the activity. So we estimated about 500,000.
Yeah. So what are the activities that the general fund has to cover?
The salaries and chargebacks.
And
I think it's
everything
one
else
more
is
other thing.
covered by the grants?
Yes.
I believe rent too.
No, well, we worked that out. I know that's one on the agenda somewhere.
Okay, thank you, Madam Chair.
Okay. Okay, we can proceed.
Under recommendation 2023-04A, we recommended that management and budget ensure that procurements that require Wayne County Commission approval are not processed by a voucher. This was also deemed as in process. We determined that the current rental agreement between the county and Joseph Campbell is set to expire on October 31st, 2028. However, according to our review of the J.D. Edwards General Ledger and discussions with HHVS Finance Management, we found that the Wayne County Healthy Communities is currently remitting payments directly to Joseph Campbell each month and is receiving a reimbursement from the county through a voucher process. HHVS Finance Management stated that the county will resume responsibility for remitting direct payments to Joseph Campbell to adhere to the agreement terms. However, we determined that management would need to reconcile the rental payments that have already been reimbursed to Wayne County Healthy Communities. Based on our limited assessment, if the plan action is implemented as described, the action appears to sufficiently address the recommendation. However, a follow-up review may be necessary to verify that the described action has occurred.
Marcy?
Just to add a little history on this one, in the original engagement, what had happened is the contract between the county and Joseph Campo had expired. So the Wayne County Healthy Community was making payments to Joseph Campo to keep the rental space at the one FQHC facility and then submit through a voucher process to the county for reimbursement, which is kind of circumventing, the commission's authority to approve the contract. They did get the contract approved. Like I said, it's not gonna expire until October 31st, 2028, but you want to make sure there's a reconciliation. So whatever that contract value is, what's already been paid through the voucher system is taken off that contract, so you don't exceed what the actual contract value is with the payments through voucher and then the remaining on the contract.
Commissioner Peterson Mayberry?
Thank you, Madam Chair. The one question I had was, I know it was denoted that they were exploring options with a new ERP system. Would that system correct this findings that you recommended?
Well, I could
I
tell you
would-
what.
Go ahead.
Well,
Go
just
ahead, Kamal.
Kamal Caparel could tell you what's been done. Well, Marcy explained the first part, why the FQAC paid it, but currently in Oracle, we already entered the lease payments in Oracle, so it's set up as of last month. So going forward, it shouldn't be a problem at all. So now the county have resumed payments. It will be going through the county. Also, we just have to do everything Marcy said, just reconcile. Like for a good example is this month was the first month we had it set up to go out, but the FQAC had already paid it. So we just have to make sure there's not a double payment. If it is, correct it. But going forward, the county is set up to handle the rent payments going forward through Oracle. So it shouldn't be an issue.
So that's the new system.
Correct.
And
Marcy?
to add to that, I think what's important, I think it's not just for this contract, but other contracts in the county, it's important that these payments are made through a purchase order, because the purchase order is going to have the controls in place so that you're not going over the purchase order that ties to the contract, and not through the old terminology voucher, which I think is now a purchase agreement that doesn't have a PO attached to it. So as long as it's paid as a purchase order, it's going to have the controls in place.
And if I could add, I think if the purchase order is adjusted to account for the payments that were already made by the FQHC, then that would act as an additional control to make sure it doesn't go over the contract amount.
So if I could, just one more. So through all of this that's being discussed, is that written? How is that embedded in the process? Since it's a new process, how is it embedded in the process for those who are doing the process to know what the process is going forward?
How is embedded? Because once it's set up in the system per what, I don't know who voice that was. Once we set the contract up in procurement, everything is all connected within Oracle. As a matter of fact, the way we paid lease payments was a different structure in Oracle. So we spent all last month setting that up. So it's just built into the system. So it shouldn't be an issue at all.
Okay, and I hear the word Oracle again, so I'm just trying to make sure, because we've heard some glitches with Oracle. So thus far, this system in Oracle is working.
Well, thank you for saying that last part.
Thus far,
the
I
last
threw that
part,
word in there.
yeah, no,
Oh,
no.
it's working. Okay.
Well, the last part that I would say, I do have a team that keep an Excel spreadsheet, so
Mhm.
just not dependent on Oracle, but also keeping track as a backup.
Mhm. Okay. Manually as well. Okay.
Correct.
Thank
And
you,
yeah.
Madam Chair. Mhm.
Okay, we can move on to the next item.
Yes, For recommendation 2023-05A, we also know that this is in process, and we recommend it to enhance the controls over patient payments received at the federally qualified health centers. We recommend policies and procedures are revised to include someone outside of the CFO to open the mail and prepare a log of mail-in payments prior to providing to the CFO and immediately endorse each check. We reviewed the revised cash management policies that we received during our site visits and determined that the procedures required for Wayne County Healthy Communities accounting clerk to open the mail separately before it is forwarded to the Wayne County Healthy Communities Director of Finance for verification. However, we found that the cash management procedures did not state whether the Wayne County Healthy Communities accounting clerk is also required to log in or immediately endorse the checks after they are retrieved from the mail. During the site visit, management stated that they will further enhance the cash management procedures to address this process. Based on our limited assessment, if the planned action is implemented as described, the action appears to sufficiently address the recommendation. However, a follow-up review may be necessary to verify that the described action has occurred.
Okay. Anyone want to add anything, Marcy?
This is just a matter of taking the additional internal controls and enhancing them and sure they're included in their formalizing the policies and procedures. I think we
Okay.
need to do that.
Okay.
And I will turn the next recommendation to Matt.
For recommendation 2023-05B, which is still in process. To enhance the controls over patient payments received at the FQHC, we recommend policy and procedures to be revised to require a daily transaction report to be run of the daily receipts posted to the ECW system and reconciled to the actual receipts given to the chief financial officer or their designee for deposit. We determined that the revised cash management procedure required the accounting clerk to reconcile and compare the EHR postings to the daily patient receipt log and investigate any discrepancies that are identified. Once the reconciliation is completed, the Director of Finance will review and verify for its accuracy. For a sample of 3 weeks, we reviewed the cash receipts, including the cash receipt log, Excel spreadsheet, bank deposit slip, and the supporting documentation. We then reconciled the cash receipt logs, EHR posting, and bank deposit slips to determine whether amounts agree. Based upon our review, the checks received did not reconcile between the EHR posting and copies of the actual checks, nor the deposit slip. Wayne County Health Communities Management stated that on a go-forward basis, they will note and document reconciling items on Excel spreadsheet that they generated from the EHR system. Checks will also be processed in the EH system based on the date received rather than the check date. Based on our limited assessment, if the plan action is implemented as described, the action appears to sufficiently address the recommendation. However, a follow-up review may be necessary to verify that the described action has indeed occurred.
Okay, Commissioner Kling?
Yeah, thank you, Madam Chair. Just to get caught up on a little of these acronyms, what is both the ECW system and the EHR system?
Javar Jackson, CEO of FQHC. The EHR system is our electronic health record. We post payments inside of that EHR, and ECW is the name of that EHR system, eClinicalWorks.
So this is to the individual patient's accounts.
Correct. So as a patient comes in and makes a payment, they're posted inside of the electronic health record, the ECW, and then it is captured on the electronic health record, but also on an Excel file if it's a cash or a check deposit.
Does this have anything to do with either the old JD Edwards or the new Oracle?
These are isolated systems. So this is a system specific to the FQHC.
Okay. Thank you. Thank you very much, Madam Chair.
Marcy?
And just to add the reconciling items, this was a timing difference from how they recorded the check.
Okay. Great. Okay, any other commissioner questions, discussion?
We have one more.
Next
We
one.
have one.
Okay.
Chris.
Oh,
Okay.
we have one more?
Yes.
Oh, sorry, I'm jumping the gun here.
Proceed to the next
Keep
recommendation.
going.
2023-05D, which is still in process. To enhance controls over patient payments received at the FQHC, we recommend policies and procedures are revised to ensure all cash receipts are maintained separately and not commingled with petty cash. During our February 2026 site visit, we observed that the cash receipts and petty cash are maintained in separate pouches. Each pouch is stored securely under lock and key in the Director and Finance office. However, we determined that the cash management policy and procedures need to be further revised to reflect the actual practice of maintaining cash receipts and petty cash separately. Based on our limited assessment, if the plan action implemented as described, the action appears to sufficiently address the recommendation. However, a follow-up review may be necessary to verify that the described action has occurred. This concludes our presentation. We welcome any questions or comments that you may have.
Marcy,
I have nothing for that.
any commissioners? Commissioner Clean.
Thank you, Madam Chair. Was like 6 or 7 of these were in process on this, and they all come up with a follow-up, maybe, right, the standard language. For the AG, what would trigger a follow-up that may or may not happen? See, I'm looking at this and saying there's a lot of bookkeeping stuff in process, and maybe we want to look at it because a lot of this is talking about this summer. We might want to be looking at it in a year just to make sure they're all there.
I agree. We would do our follow-up engagements based on risks of the county. I believe the risk on this one is enough to engage a follow-up engagement.
All right.
And-
Thank you, Madam Chair.
Thank you. And to follow up on that, what's the timeline that you're looking at to bring that back to this committee?
I would say we do a follow-up within 6 months.
6 months.
Give time
okay.
for the fiscal year 2026 to close out, make sure it's done correctly.
Okay, great. Any last questions, discussion? Okay, we do have a motion by Commissioner Garza and supported by Commissioner Peterson Mayberry to receive and file this report. Please vote on your tablet and I will vote yes. All right, great. Thank you all for joining us. Thank you, Kamal, for joining us online. Madam Clerk, next item.
F, such other matters as may be properly submitted before the committee.
I have none. Next item.
G, public comments.
Is there anyone here who wishes to make a public comment to the Committee on Audit? In person, on Zoom, on the phone? If you're online, you can unmute yourself. Any emails?
No emails received.
Okay. Second call for public comments. Third and final call, public comments. All right, hearing none. Next item.
Adjournment.
It's been moved and supported. All those in favor of adjourning,